Today is 9/11, and I want to give a shout out to all of American gladiators, warriors, and veterans. Man, I remember 9/11 like it was yesterday. I used to live in California back then. I just moved here to Florida about 2.5 years ago, a little less. And I remember driving to work, not knowing anything. I used to go to work. I used to work on an Eastern time zone clock, even though I was on the West Coast, and New York commodity markets opened at 7:20 in the morning, so I would have to be at work at 4:20 in the morning. Yes, I woke up every day for about 8 years at about 4 in the morning. My office was just 10 blocks away from my house, and I came in and I turned on the internet, and it wasn't working. It was just spinning. It was just too many people online, and I guess back then the internet wasn't what it is now. So I turned on CNBC. I just turned on TV. It was on CNBC, and I just saw, I guess it was a replay, and I saw the airplane hitting the first building, and then immediately after that, the second airplane hit the second building in real time. And my heart just dropped. It was awful. It was an awful day, and a day that I will never ever forget. And it's a day we have to remember what happened and hope that nothing like that ever happens again. So with that, let's get into today's market analysis. Friday, we're looking at a potentially another sell-off. Why? Well, markets are sitting at the 50-day moving average, and momentum levels, the 50-day and the 200-day, have both turned south. Also, last time I checked the Russell 2000, it was fairly bearish, and here is the kicker here. I want to check something, and I want to show you guys something interesting. Now, I know the market was coming off all-time highs, but if you look at small cap stocks, not small cap stocks, excuse me, all stocks priced over $2 over the past that have been trading a minimum of 6 months. That means most stocks in the stock exchange minus the small caps. You will see that the last few days we've been trading below the 200-day moving average, which means the overall stock market is entering a bearish territory. That's right. You're probably thinking, how could that be? Well, when you have less than 50% of the stocks in trading in the US that are trading below the 200-day moving average, this is the 200-day moving average, that means the market is actually bearish. Now, when you're looking at the QQQ, you're not seeing that because it has a lot of the large cap stocks. Look at that. You're not seeing that at all because the market is lopsided because there's so much capitalization in these larger cap stocks. And that's why this market looks like it's making new highs, or at least coming off, had a 1, 2, 3, 4, 5, 6 sell-off days. And same thing with the SPY. See here, barely at the 50-day moving average, because those stocks, those large cap stocks, have huge market capitalization. And they're making the market seem like it's bullish. But the market is not bullish. The market's actually bearish right now. There's less than 50% of stocks trading above the 50-day moving average. By definition, the market's bearish. Imagine the SPY trading right here. That's where the overall market is. So there's a big change in sentiment. Now, with that, let me talk about global economy, and then I'll tell you about how to take advantage of this market. Analysts say investors are preoccupied with COVID-19 pandemics and hope for development of a safe and effective vaccine. Very much true. Big tech is benefiting from a shift to online life. The pandemic and ensuing staying-at-home economy has accelerated. But there's too much too fast. Momentum levels are overbought. The latest gyrations on Wall Street followed a wild stretch where the S&P careened from its worst 3-day slump since June to its best day in nearly 3 months. The selling came as the odds lengthened. The Congress will deliver more aid to the economy before the November election, support that many investors say is crucial, very much so. Japan and UK agreed on a comprehensive economic partnership after Friday's in principle. You know what that means, in principle. US and agreed on a trade war in principle. Do we have an agreement? Not really. But the deal was not signed, according to the Japanese Foreign Ministry. The talks have been ongoing as Japan has a widespread trade deal with the European Union, which Britain left in January. Britain economy grew by a monthly rate of 6.6%, and crude oil is trading again below $42 a barrel, which is the price U.S. frackers pay so they can develop oil. Now, because the NASDAQ 100, and I want to show you why, we're sitting at the 50-day moving average. If you look at momentum levels, and I'm not going to go into this because I've been going into this way too much. Again, the market overall is bearish. If you look at the NASDAQ 100, which we're going to look at right now, and we've been looking at it every single day, only 40% of stocks are trading above the 50-day moving average. Let me show you something interesting. Pay attention. I drew this circle many months ago. 50-day moving average on the way down. What happens every time we get that rubber band stretched out? We go lower. We're already at 40th percentile, and I told you guys that we were going to go to about 20th percentile before coming back up. So we're not there yet, all right? So I'm seeing more downside in the NASDAQ 100 because of my momentum levels. And if you look at the 200-day moving average, which is very fundamental, you're seeing that it's finally turning south. So we have the short term moving lower, the 50-day, stocks trading above the 50-day moving average, and we have stocks moving above the 200-day moving average, trading lower as well. So right now, the sentiment is weakening on the top 100 NASDAQ stocks. So if we look at the top 100 NASDAQ stocks, here they are. Now we're looking at them from a strength position, Zoom, Tesla, DocuSign, JD, NVIDIA, but now let's look at them from a weak position. BMRN, WBA, WDC, EXC. I told you about Western Digital like 3 weeks ago when it was still higher. But these are the stocks that you want to sell right now. So let's take a look at them real quick. BMRN. Let's look at it. This was a high flyer. Something good didn't happen. The stock sold off. It hasn't been doing well since. It's near support. If it breaks this 68 level, it's a dog. I would about 60, actually 65. If it goes below 65, it's a dog. Next one, Walgreens, WBA. Let's look at WBA. And I would be writing these down, or you could always look at the video again. Oh, this does not look good. It's already at the bottom. Always sell the weakest. Sell the weakness. Buy the highest, sell the weakest. Look at this. It's breaking down. Let's take a look at this on a 6-month. Oh, yeah. This stock looks like it can go down further. Oh, yeah. Definitely, definitely. Walgreens, WBA, not pretty right now. Let's look at another one. Oh, yeah. Western Digital. Let's see how much it's lost. I told you about this stock like a month ago. I told you to sell this stock. And one more. Yeah, it hasn't been doing well. It broke down. It was at 41. It went all the way to 33, and now it's looking like it's going lower. Yeah, everything's moving to the cloud. People aren't using regular drives, hard drives anymore. Everything's stored in the cloud. That's why NVIDIA is moving so much higher, and these traditional stores are not. There was one more stock in this group, by the way. Let me see if I could find it for you. Let's see here. Must have gone higher. I forgot the name. I think it was Teledyne or Seagate. It was Seagate, but I don't see it here. It must have gone higher. Let's look at Seagate. Why not, right? Let's look at Seagate because they both do exactly the same thing. Yeah, it hasn't really. It was up here when I called it. Now it's lower. Yeah, but you should stick to Western Digital. It's the weaker one. Next one, EXC. I'm giving you the weakest stocks, folks. If the NASDAQ goes down and it's looking a little weaker, a little shakier right now, I'm telling you right now, these are going to be the stocks that lose the most market cap. Oh yeah, we're moving down. Almost at the low. These are definitely stocks that you want to sell. And last one, we've got BIIB. 1, 2, 3, 4, 5. BIIB. Biogen. Yeah, just not looking really good. It's breaking down, folks. Yeah, it's breaking down. So again, let me go through them with you. And again, these are the weakest stocks in the NASDAQ 100. And the NASDAQ 100 right now, the momentum levels aren't looking pretty. They were stretched out for so long that even in the best case scenario, I'm expecting more congestion, sideways trading action. I would bet that basic material stocks would start leading, and I'll show you why. If you go to my 10 sectors, if you go look on an average, you'll see tech and consumer discretionary still leading, but look over a 1-month basis. Basic materials. Technology's already here. It's not even next to consumer discretionary anymore. So there's definitely looks like a rotation happening, and technology, the stay-at-home, I guess the stay-at-home stocks they were looking forward to the virus, the vaccine coming out for the virus, And I guess because it's coming out soon, they're now cooling off, and Basic Material and other stocks are starting to take a lead. But again, if you're going to fade or sell stocks, or at least avoid stocks, avoid these five: BMRN, WBA, WDC, EXC, and BIIB. Now, I know it's Friday, but this is a really important day. I want you to pay very close attention. In the world of trading, the elite often keep the best strategies to themselves. I used to keep tons of strategies to myself before I got on this wealth press bandwagon. But thanks to a brand new breakthrough from trading legend Adam Sarhan, you can make the same explosive trades as the Wall Street pros. Identical. Here's how that's possible. Adam is a Wall Street insider who's worked with some of the world's wealthiest people. Get this: Donald Trump's former stockbroker, Ace Greenberg. Even billionaire fund manager Stanley Druckenmiller. Do you guys know who Stanley Druckenmiller is? He was George Soros' #1 trader when George Soros crashed the Bank of England. This guy's top 5 trader of all time. Now, Adam is opening up his wealth cultivating secrets to the public. That's right. It all has to do with 4 special trading sessions. Each time one comes around, dozens of stocks start exploding in short 24-hour bursts. Some take 3 days, some take a week, but this is all short-term trading. There's no day trading. It's not just during earnings. It's during every market period. When earnings comes around, oh my goodness, that's when it gets turbocharged. But you get trades all throughout the year. And again, they're usually held about 24 hours, 48 hours, no day trading. You just buy calls or puts, no spreads, no fancy schmancy stuff. You got to check these 24 bursts out. Don't miss your chance for massive profits. Click on the link below to reveal Adam's game-changing secrets. Adam Sarhan is the man. Anybody who's worked with Ace Greenberg and Stanley Druckenmiller, folks, you got to get in on this now, all right? Follow the link below. Do it now.